Hello everyone, the Chart Guys have been working on an introductory technical analysis course for quite some time now, and after surveying hundreds of traders with what would be the most sought after information regarding technical analysis, we came up with this course, When to Enter and Exit. It covers over 5 hours of the basics on when to enter and exit, and we feel after watching this course it will help build a foundation of technical analysis knowledge which will eliminate a lot of the uncertainty in the world of trading stocks. So the course outline, we go over the psychology of trading, establishing a game plan, the different indicators we use to signal a bullish and bearish entry, how to recognize support and resistance levels, poor entries, where traders make mistakes, exit targets, how do you know where to sell your trade, where to place stop losses, that's very important, minimizing losses is what keeps you in the game long term, my personal preparations, how I go about getting ready for each trading day, and then piecing it all together, utilizing all the information we just learned and how to apply that in the real world for making successful, profitable trades. As a bonus, we also include a lot of information on finding entries and exits utilizing patterns, and you can find these patterns on every time frame on pretty much any stock and commodity trading, and certainly being able to recognize those patterns can give you an edge as well. So we hope you will check this out. Again, it's an introductory level course. So if you are new to technical analysis and trying to get a firm grasp on things and feeling a little bit overwhelmed, then this course is for you. I hope you check it out. Appreciate you watching. Checking in on SPY daily weekly time frame. The bulls out in full force, hitting a new all-time high today. Last all-time high we hit, rejected from the upper Bollinger Band resistance and then consolidated. And here we are again, falling just shy of the upper Bollinger Band resistance, 228.16. and pulling back a little bit at the end of the day. That pullback is not surprising. I'll show you on the shorter term time frames. We were certainly pretty overbought with no consolidation on the hourly time frame. Now we are getting that consolidation, and we will see where we head from here. We know this daily middle Bollinger Band is very key support. We held it many, many times, and the bulls won that battle in the sideways channel that we were trading in. This is the highest close we have ever seen on SPY, and we are looking for this upper Bollinger Band to ascend, creating further room to the upside. As long as that daily middle Bollinger Band supports, you can see it's beginning to ascend as well. As long as that level holds, the bulls are in full control. Weekly time frame, nice bounce off the exponential moving average support and continuation to higher highs. Bulls in full control. Checking in on the shorter term time frame. The rally today is directly associated to the financial sector, in my opinion. So the bulls were in control on the 5-minute time frame the entire day, with the 100 and 200 period moving average support the entire day. And things really took off at 11 a.m. We hit a new high, and then we didn't even test the 20-period hourly moving average support for over 4 hours. We didn't even touch that level. That just shows tons of strength to the upside and no looking back for the bulls. But you look at XLF, the financial sector spider, the bull break occurred at 11, or make that 10:15 a.m., and you look at that chart, very similar to SPY. You look at SPY, and the bull break occurred at 10:15. We made an attempt, and then 10 minutes later, the bulls caught up. And the correlation between the financial sector and the S&P 500 since the election has been extremely strong. And it's definitely worth watching both, as red days in SPY have followed pullbacks in the financial sector and vice versa, with today the bulls leading the charge to the upside in the financial sector. So look at the hourly time frame. Here's what I was talking about, where we have the bulls in full control with no consolidation. We formed a bearish reversal inverted hammer on the highest volume candlestick of the day at that point. We confirmed it, and now we're consolidating. So it's still entirely possible that this hourly time frame is forming a bull flag. We're going to have to see how we are set up tomorrow pre-market, but the bulls are without a doubt in control with all 5-minute, all hourly moving averages as support. I shouldn't say all 5-minute, because we did lose that 20 period at the end of the day. Should say all major 5-minute moving averages as support and hourly levels. And all this volume here at the end of the day, that came after hours with shares settling from earlier in the day. So the volume climax did signal the top, and the bearish reversal candlestick was confirmed. But again, it's currently normal, healthy consolidation ongoing after that really big bullish breakout. So very curious to see where we start the day tomorrow, and if it still looks like a bull flag on the hourly time frame. And if it does, we'll be looking for the bulls to head back up towards the 228 level. And if it does not, if we can consolidate further, we know 227 psychological will act as support, as that has been tough resistance in the past. So keep an eye on the financial sector. Bulls in full control. Congrats on the new all-time highs. There are many, many, many individual bullish charts out there, and certainly lots to take your pick from. We'll see if the bulls can get over that upper Bollinger Band daily resistance, and if not, we will look for a slow and steady bullish approach rather than a full-on breakout. I appreciate you watching. We'll check back in tomorrow, and I will see you then.